lines. We've got 4 setups to go through here. Aussie yen, CAD yen, Swiss yen, and Kiwi CAD. Trading after rejection, through, or towards. Right? Moving on. So what do we have here? This one here is building on what we just went through before, right? This is a valid IBOC because it has, well, it's valid, but one that, again, we want to stay away from. Why? We have our confirmed trend change. Nice. Looking good on both the 4-hour and the 1-hour. Broken lows, broken lows. Valid. Break and retest the 1-hour. Pull back to 382. Valid. He's ready. Daily direction prediction, pretty solid. Down. Valid. All those things scream valid. The one major thing here is we'd be entering post rejection off of this upward sloping trend line, right? So key point here is it's been rejected and we're entering post rejection. If it were to break down and it was on its way, if it did a break and retest the 1-hour on its way to the trend line, okay, and maybe we want to even be able to trade through the trend line. So there's no hard rule that you can't trade through the trend line. It's just entering after the rejection of a trend line is a big no. This is not a setup that I'd ever take, right? Overall, it looks pretty cool. And we've got the other things. The other trap here is the trend change is there, setups there, everything's cool. But again, trend line, big negative. Next setup over here. Same thing, different example, except this one here was an IBOC because we'd already rejected the 4-hour 50 EMA, right? Now this one over here, same thing. This is an IBOB, but I still wouldn't, because IBOB, we're on our way to the 4-hour 50 EMA. We haven't reached the 4-hour 50 EMA yet. But it's the same effect. It's an IBOB that is being pretty well holding this upward sloping trend line. Not something that I'll be interested in taking. Right? Got the confirmed trend change, all that jazz on the, not really on the 4-hour, but we've got the confirmed trend change on the 1-hour, which is more than sufficient. 4-hour, not really. So IBOB, not an IBOA. But yeah, trend line in the way. Post rejection, it's already reached it and it's rejecting off it. Now the next example over here is an IBOC. Now this is the example that we gave before, right? It's the same setup as we were looking at before. You'll notice a lot of these are very much the same setups, but I'm just kind of giving different fragments and different reasons why we could or wouldn't take them. This trend line here, sufficient, right? We're trading down towards the trend line. We haven't rejected it yet. We could even be pushing further, pushing through that trend line. I just happen to put the profit target there for any reason, doesn't matter. But again, would we take this setup? The trend line is not a negative here. We've got a minimum, as we can see, 1-to-1 to the trend line, which is good. My trading plan, and I'd probably encourage for you as well, is to have a minimum before trading through any negatives. Minimum 1-to-1. So trend line, 1-to-1, cool, happy with that. IBOC, cool, happy with that. Now, the real art here is to remember all of the negatives, right? All of the different traps and all the different things, because 1 or 2 of them, maybe even 2 or even just 1, may make the position void. So again, this one's still not valid, even though the trend line's further down, simply because we haven't got the confirmed trend change again. Haven't got the 4-hour, haven't got the 1-hour confirmed trend change. So one that we'd stay away from, but not because of the trend line. So I wanted to throw that one in there. Another one here. This one here, great setup. Likewise, IBOC. So these are all IBOCs. I think they all were. At least the last couple were IBOCs. But what have we got? Another trend line here, but it's being broken and retested. There's a break and retest of that trend line now. Valid. That's good. Still IBOC. Same thing, same everything, like daily direction prediction, all that aside. This is not a bad setup here. Like, this is one that I didn't take, but you certainly could have. I didn't like the stalling here. Anyway, that's not the reason that we're on this call, but post trend line, break and retest, that's actually an added confluence now. Again, it's not essential for a setup. Maybe there is no trend line at all in your setup, and that's fine as well. But the major thing that we're looking at here, this would be the difference between, let's go back to This one here, subpar. This would fall into, it still meets all trading criteria, but it falls into that box of subpar. Like if you took it, fair enough. If you're in your first 6 months trading or 3 months trading, fair enough. I can see, but I'd point this out and say, hey, maybe don't trade through trend lines, right? Or post rejection. It's a trap. Whereas, so that one's subpar, but pretty much the same setup, but having a break and retest, obviously just going long instead of short as well, but a break and retest might take the exact same setup from subpar to now epic, right? No trend line, same setup, all things equal, may be solid, right? Having a trend line as post, the first example there, subpar, and then with the trend line in favor, break and retest is epic. So that's kind of the 3 different things. And that just might be one of these things that you may be overlooking. And that's going to make a significant difference on your overall result, your long-term result. Was that all 4 examples? I believe it was. Yeah.